Hey everyone, welcome back. My name is Levi Woods. Today is June 24th, and this is Drawbridge Finance. Not offering financial advice in any way, shape, or form. This is just what I'm doing, what I'm looking at in the market. Hopefully, you guys are having a fantastic day. It's been a great week. We're seeing some bullish momentum in the indexes in general. You know, obviously, lots of news out of Israel, Iran, and the potential ceasefire that is going on there. So hopefully, you know, my heart goes out to everybody over there. We've got family actually in Israel, so it's a mess over there, and I hope that the conflict can be ended soon. I know that it has been going on for literally thousands of years in that area, and you know, this is a time where we need to, you know, collectively figure out our differences and not be shooting missiles at one another. So I hope you guys are doing well. We can talk about that a little bit if in terms of political structure, what's happening with the war. But I think in general, we can see what's happening from the market's perspective, which is not much, you know, from a monetary perspective of what's going on with the financial indexes worldwide. Hi, Mike. Good to see you. Thanks for joining. Yeah, from a financial perspective, you know, we're just not seeing much movement at all. Let's take a look at what the markets are doing right now. We'll pull up. I've got IBKR open, and we can look at some trades and trade ideas. But right now, if we look on the top right hand side, we can see the SPX is up 1.2%, Nasdaq up 1.6% today. Pretty nice move. Russell up 1.3%, Dow Jones up 1.2%, VIX down at 17.61. So the VIX, which was elevated for the past week, if we're to let me just save this here and let me just zip over to a 1-day chart on. If we look at the VIX, you know, we were in an elevated mode last year or earlier this year. Obviously, we saw some high volatility, and you know, these VIX spikes when they occur are pretty abnormal. But normally when we see VIX go up, it goes up into like the mid to high 20s. And last week, if we kind of zoom in on this area and scale this into a range to see, you know, what the perspective was over the course of the last 12 days, and so about a week and a half of trading, we can see this elevated area for volatility index. And now today, with that ceasefire being announced, we're seeing that volatility drop right down. Now I have marked on here this red line, which is at 17 level, and that line represents kind of the average median price of the VIX in normal times. So when we look at this, we're now in what's considered an average VIX level, and it's important to take that into consideration when we are putting on trades. What are we doing? How does this affect our trading style? So when we're in elevated mode here, I might not be entering quite so many double diagonals or double calendars, because those actually hurt from a volatility contraction, and we've now witnessed that volatility contraction. So what I'm looking at now I'm entering double calendars, double diagonals, things like that will take advantage of volatility expansion if we are to go back up. So it's really important for options traders to kind of understand the environment overall, and it's why VIX is one of the most important things. We can also see that, you know, as that volatility was going up, we saw prices of oil going up. This is a daily chart, so we saw the oil up, and now as that volatility comes down, the volatility of oil also came down. Gold has not been quite so reactionary. You can see over the same time frame, we saw a little bit of an up move, but not nearly as dramatic. The precious metals have been in a very strong bull run this year, so lots of people are expecting that to continue. But you can see here we're way up. I've got the Bollinger Bands on, and we're very much at the top of the Bollinger Bands on gold. Silver, same thing, we're actually trading outside of it. So even though this bullish momentum is here, point of control much further down compared to these current prices. Silver marking right now at $35 an ounce. You know, the point of control is only $30 an ounce. That's a substantial potential move to the downside. So play with caution. I'm not entering long positions at these levels for stocks like, or for underlyings like gold and silver. I would play those as a neutral to slightly bearish strategy. Now, Apple, on the other hand, we can see that it's actually been in a downtrend and it's trading below its point of control. So this is the type of position where I might look for a bullish move on Apple, and I would play slightly longer delta with my positions. AMD has had a very, very nice recovery. AMD is a very strong company. I've been long AMD through this whole drawdown. And my expectation is that we're going to continue to see an up move in AMD. So I will continue to hold long deltas, and I won't start reducing that assumption until I get back up, until it hits this upper Bollinger Band. And as time goes by, this Bollinger Band, as you can see, is kind of retracing. So if the stock was to trade sideways here suddenly, then what would happen with the upper Bollinger Band is that it would actually just travel down and eventually meet it. That's how that works. This Bollinger Band will compress if the stock was to suddenly move sideways. If it continues to move up, then obviously that is not the case. So say the stock, moved up like this, then this Bollinger Band will react slightly differently, and it will start to expand to the upside, and we'll see that band chase it kind of like this. So it's kind of how that works when you're looking at those. Talking about stocks that are way, way, way at the top and outside of their Bollinger Band, outside of the channel that they've been trending is ARK had an extremely large move to the downside and now has moved up nicely. So this is the type of trade that I like to do, where I play neutral strategies on this, and I look for this movement as it comes back down potentially into this channel. And we don't know what that movement's going to look like. It could be very extreme, but I would expect that it's going to trade in this upward trajectory for a while. ARK, I was just looking up here, when we look at it, the 1 year chart, it's up 61%. So pretty amazing. This is the ARK Innovation Fund. Nice to be long. What I do with these is I play covered calls against them. So a very, very, very lucrative style of trading on those funds. If you're looking for funds outside of like QQQ, SPY, things like that, and you're looking for other funds, this one is one of the ones that is juicy for options. We like to use that word where means we're making lots of premium, we're collecting lots of premium as premium sellers. Kevin says, good afternoon from Lakeland, Florida. Good afternoon, Kevin. Always good to see you here. And MB watching from Berlin, and Andrew's watching from Toronto. Boy, lots of people online. Good to see you all. If you have any questions about any particular tickers, let's get into that. And I will continue to go down my list, but I would love for you guys to type them in the chat. We'll do a little bit of analysis on any of those. We'll look at the technicals. We'll look at the fair market value of things like that. Adobe, we can see it's in a slight downtrend on over the past little while. We've been trending down in this channel like this, and these are trades that are very, very easy to trade. This post earnings, and very, very easy to trade as neutral trades, and that's the kind of thing I like to do. Amazon, I would expect to trade sideways to slightly down in this market environment. If we can see that point of control being here around the 187 level, and Amazon trading at 213. Baidu has been chugging along. Baidu was we were playing this earlier this year. I played it when it was around that $100 mark after this move. This was I'm going back a little bit too far here. We're looking at the daily chart, so I'm just going to scroll in just slightly here and look back at the past year, and the right around this $100 mark, I started to play with this, and it has been a kind of a great sideways performer. So we're not seeing a lot of movement either way. Even these earnings haven't been massive. So if you're looking for strategies on things like iron condors, this is a stock to maybe consider. Is Baidu, Chinese company, and Cargana or Car Gurus, we're seeing that move up, massive moves on earnings. So this one may not be the best type of stock to play iron condors on. Chewy continues its bullish trend, and yeah, but a bit of an anomaly with this one. I you know, I don't know where we're going to see this price action. And you can see we have a couple of earnings misses here over the last, you know, couple of years, lots of earnings beats, but right now we're in a bullish momentum. Hood, very much bullish momentum on Hood. For those of you who follow, there's lots of speculation that this stock is going to continue to outperform. So if we're looking for quick risk reward trades, like a little bit of swing trading, you know, playing some of these longer candles on the daily can be quite lucrative. You know, quite large moves, 6% today. Meta 1.83. I see that nobody's actually asked me about any tickers, so if you guys could put some in the chat, that would be fantastic right there on YouTube. Otherwise, I just run out of content and then you lose me. So the best thing to do is take a moment, say hi. If you're watching, I see there's 11 people online. You know, you guys have hit that like button, which is fantastic. I'm sure you're already all signed up for my newsletter over on Patreon, so you can get those free alerts and you can join the free Discord chat. I also have paid tiers available, so you guys can check out that anytime. But Tuesdays are my opportunity for me to just look at different trade setups. And I've got IBKR open so we can actually look at some trade ideas. If you put in a ticker, what I'll do is I would go through the options chain and look at the type of trade that I would enter today with all things considered, you know, VIX, war, outlook, technical analysis, fair market value. It's like, I'll show you exactly what my thought process is when I'm analyzing a stock and how I'm able to be a successful independent trader. XOP, Dennis, thank you for joining us, Dennis. Good to see you. We'll take a look. We're going to jump right over to XOP just like that, because that's how I like to run this. So we're going to do a quick search here. I'm going to put XOP right on my list, actually, because it's a good one. And I think I would learn how to use, where is it adding it? I don't know what's going on. Okay, XOP, oil and gas exploration, and obviously over on the 1 day, you know, we've seen a large move to the upside. My expectation with stocks like this is that they will kind of mean revert and they will stay within some sort of trend over time. So when we look at a stock like this is going back to September. We can see how this is functioning. It's very much in the center of the Bollinger Bands. The point of control, very close to where it's trading right now. And what I would do typically with something like this is I would set up some sort of strategy that might take advantage of some extra volatility that may occur in this stock. So, or this underlying. In doing so, what I want to do is I want to do a neutral trade where I have an outlook that, you know, I'm going to mark some levels on here, usually inside of the Bollinger Bands. And I would want these areas to be my break even. So that 112, 146, about a 30-point wide range on it. And then what I look to do is I look to try to target an even tighter range inside of this. And I might put those levels right where there might be some support. What are we doing here? Where there might be some support here. There's no resistance up above except for way back here in February. So, but these might be some levels that I would look at. And this is where I could set up either an iron condor or I would set up a double diagonal. Now, because the volatility is a little bit less today, this is where I might consider doing the double diagonal or double calendar as opposed to an iron condor. And so I'm just I mark those lines on there based off of, you know, where the previous trading was, just kind of looking at the expected range. If we were to speculate as to where XOP may go, you know, it's going to be some sort of standard deviation cone. You know, that's the likelihood is that it's going to trade in somewhere in this range. So what I want to do is I want to pick a date that's far enough out here. Maybe I go out to mid-July and I target this area where I think the stock might trade. So my first step usually is to go into programs like Seeking Alpha or Investing Pro, and I look at what exactly has been happening and what the potential momentum is here. So we can see the 1 year we're down 12.93%. Quant rating as a whole 309. So when we see this, we have decent momentum, we have decent expenses, it pays a dividend, the risk is poor. So there's a risk to the downside. This is for long investors when we look at these ETF grades. The liquidity is great. These are all good things for option traders. When I look at this, this quant rating coupled with these types of things, the risk especially, this is all confirming that what I want to do. The momentum's okay. It's kind of in an uptrend. What do I want to do? I want to play a neutral strategy. And if this risk comes into play and the volatility increases, I want a trade that will help me. That's why I might consider doing a double diagonal or double calendar. Okay, so now that we have those things in line, we've got some levels, 140, 127, and we're going to pick a time frame. I'm going to go over to IBKR and I'm going to pull up the options chain for XOP. So go to XOP, find the stock, and we're going to go out. I might go out 17 days. The 127, we're trading at 127 right now. Why is that not congruent? 127, where were my levels set? Were my levels set incorrectly on the this is the 1 day chart. We're at 127. Oh, sorry, these lines. 118. This is the 118 level. So 118 and 140. Those are the lines we're looking at. I was just misreading my chart. So we're going to go back to IBKR and we're going to take a look at that. So 118 on the downside. This is an 11 delta. That may not be aggressive enough. So close that order entry. I'm going to turn on the strategy builder so I can do a double calendar on here, and then the 140. Now I don't love to sell premium this far out. When I look at the delta, it's like 0.8. I may have to be a little more aggressive. IBKR is nice enough to actually highlight this color for me, and your platform may do the same thing if you don't use IBKR, or if you have a lesser platform. Definitely consider upgrading to something that does show things like the expected move here, which is one standard deviation showing in the dark blue range, and then the lighter blue showing above that. And so I'm looking at these strike values in the middle. With the 118, what I might want to do is make sure that I'm inside of this. So this is like the 17 delta, and I want to potentially sell the 20 delta on the other side. This is a slightly delta negative trade. If we were to look at the profit profile of this, the potential of this trade, I have a 72% probability of profit, and the maximum gain on this is $126. Now, the problem with trades like this is that the max loss is infinite to the call side. You know, the max loss on the put side is going to be a $12,000, but the max loss on the call side is unlimited technically. So if we were to look at 100% move, you can see that we're taking, you know, massive amounts of risk to potentially make $126. And there's lots of people that don't love to play this type of trade. They don't want to get into a strangle like this. So the risk is too large relative to the amount that they're receiving. So one of the things we can do with trades like this is we can just go out, at a different time frame, and we can buy the exact same strikes. Or sometimes what I like to do is I just like to buy a little bit wider. So what I'm doing is I'm defining my risk. And what I'm looking for is the potential of getting into a trade that I am going to potentially make some money off of. Now, this setup is not that great. I'm going to have to pay $300. The profit profile, if you look at this, is actually fully negative. I have, unless I get a really good entry price on this, which there may not be enough liquidity. liquidity is in the open options interest, and we can see the volume on here is low for these July 25th dates. So this may not be liquid enough to get a decent spread on it. And for this reason, these might not be great trades to take. Right now, it's showing me that if I pay $291, the likelihood of expiration is that the long options, even if I stay inside of the range between 120 and 135, these other long options that I own, the July 25th, won't have enough value to be able to be sold off for a profit because I'm paying too much to enter this trade to begin with. Now, the nice thing about a trade like this is it does take advantage of volatility expansion. So if there was volatility, especially to the downside, there would be a nice profit trend to the downside. What I might have to do with something like this, and this is where we go through these setups and take a few minutes each day to look at potential things. I may not place a trade on something like this. It just may not be the right time for these types of trades. I'm going to look at an iron condor and just see what the potential value is if I was to do like a $3 wide condor on here. Let's change this to 121 to give a little higher delta. So I'm selling the 19 and 20 delta, so quite delta neutral for the short positions. I'm collecting about $50, and because this is $3 wide, I have about $250 on risk. So we can see that profit profile. Now, 66% probability profit is actually pretty low for an iron condor. I like 69%. The other thing I like is to make sure that I'm collecting 1/3 compared to what I'm risking. So what that would mean was if I was collecting $50 for this, so if I have $50 potential profit, then my max loss should be 150 in the loss zone. So 150 max loss to the downside. And you can see here that I've got $50 to the upside and 250 to the downside. That's not a good risk reward, and the probability of profit is not good either. This is a case for if I wanted to play neutral, it may not be the right product. It may be too much in the middle of where we are. If we're looking at this, what I might do is wait for a move to one side or the other. I don't know which way this is going to break, but since it's in the middle of the Bollinger Band, it's just not a good entry time to play a neutral trade. I could trade directionally, then I could just do a put spread to the downside, or I could do call spread, depending, just a bearish position if I wanted to do that. But for neutral trades, I wouldn't be entering anything today based on what I looked at. Jim wants to look at OKC, so we'll take a look at that right now. Thank you, Jim, and good to see you. So we're going to pull up OKC. And I don't see OKC. Is that the correct symbol, Jim? I don't recognize it, so let me just look on investing.com. OKC. No, I don't see the ticker OKC. Can you retype? Just check and retype, or give me the company name. Maybe it's a different symbol. And then the other one we're going to look at is NVIDIA from Stefan or Steven. Not sure how you say your name. I have a Stefan in my life, so of course there's that. That's why I've defaulted to that. Fair value on NVIDIA 141, currently trading at 147, downside only 4%. So we're seeing, analysts anticipate sales growth. Some analysts have revised their earnings downwards for the upcoming period, and it's trading at a low price to earnings ratio relative to near-term earnings growth. The earnings have been massive for NVIDIA for the last little while, but we're trading at a high earnings multiple. So this is where, again, when we look at these, what I want to do is kind of use that information and say, how does this help me make a decision or not? And let's just add a symbol here, and we'll type in NVIDIA and get that on the list. I don't know why I didn't have it on the list. So we will, hi, Jim. You got me. You got me with that one. That's good. Wow. It was misreading. So let's talk about tickers. And maybe those abbreviations for cities and states are way too on the nose right now for me because I completely missed that. But that's good. Thanks for giving me a laugh. That's awesome. Nvidia trading at near the top of its range. We're looking at the 1-day chart. We're looking at these Bollinger Bands. We're looking at this point of control. We note on Investing Pro that price point of 141, like that is right here. If we were to put in a level at 141 and say that's fair market value, and we get out of if I remove some of these other lines here, so we don't have too much stuff going on. If I was to mark that on this position, this is where, how do I want to play this? Could the stock go up? Absolutely. Could it go down? Absolutely. If it's trading at fair market value, what is my range? Where do I want to buy this? Am I good buying it around $100 when it was down here? Or am I thinking, wow, it's just going to keep going? I want to buy it here at 140. There was a lot of fear earlier in the year in April and May, and there was a lot of people not purchasing down at these levels. What I do with this type of thing is I look at a couple of factors. I look at that fair market value. I look at point of control, which if we look back on the longer time frame, it's around 116. We saw, quite a bit of quick movement through this area. What I would do is I would be looking at this level around that 128 and saying, you know what, it was pretty fast moving in here. We may be able to build some support if it does come back down. I would be looking to have my break even somewhere in this level. But more aggressive investors may say, well, you know what, I'm okay being wrong and I'm okay with this potential momentum to the upside. So I want to have my break even around that 146 or 141 level, depending on where we want to put it. So let's pull up a couple of trade ideas. Now, for me, I probably would not be betting against Nvidia to the upside. I think that it is a strong company and it definitely could continue its surge to the upside. So let's try to do that same sort of setup, looking at some sort of double diagonal and targeting. We'll set this up, say the 24 delta and then 24 delta on the upside. We'll do a tighter diagonal and we'll look out at July 25th. So what I'm doing here, did I lose my, no, didn't lose it, but I don't want to adjust this. So I'm collecting, it's not showing it now. This is strangle. I've got the 122.50 and the 134. So I'm gonna do the same thing on here. That's the July 11th, and we're gonna look out at July 18th. Isn't quite enough, so I'm gonna turn on the weeklies and I'm gonna go to what I want is about 14 days between my longs and my shorts. So if I'm doing July 11th, then 14 days later would be July 25th, and with that, what I would do is I would target those same values. And the 122.50. Why is this? What's going on here? I'm going to clear this off. I don't know what I did. I wanted to sell, we're looking at Nvidia, July 11th. I wanted to sell the 141, which is I'm looking at delta, so 24 delta. And then on this side, the delta around 24 as well. So I'm collecting $2.50. This is a short strangle. And again, 69% probability of profit. So this is one standard deviation away. I'm using delta to just help me select this. And again, unlimited risk on this trade. So I have a max loss of potentially infinite, which is to make 256 bucks. Now, people talk about blowing up accounts. If we were to play these trades too large, this is a potentially disastrous trade. They do make money very quickly because they're pure theta decay. Let's just look at the theta right now. It's at $16.50 a day. So all that's happening is positive theta decay for both strikes that I've chosen. Both short positions are generating theta, but these positions, if the market was to go down, the Vega would hurt on this trade. This would decrease the value of my account instantly, and it would also pump up the IV. And so if we get into more turmoil, this is potentially a disastrous trade, especially to the downside. Now, you know, NVIDIA can run up to the upside, but it may not. I'm actually often more concerned about downside than upside. We can limit this, of course, by buying a put. So I might go out and say, okay, well here, I can limit my risk to being only $600 loss on the downside. And you can see what that does to the slope, how much it converts it. It's still got a 66% probability of profit, but now my potential profit is much lower. Instead of making that 250 bucks or collecting 256, instead of collecting $250, I'm now collecting under $200 because I've used part of the money from buying or from selling the short put to buy a long put and defining this risk, but it changes the slope to the downside. So if there was a move to the downside, this actually doesn't hurt as much. You know, I can see if we were to move today, let me just turn myself off here. If we were to move today down to 133, this trade would lose 188 bucks if we look at those 2 points here. So if it was at 136, now if I didn't have that 135 put in here, let's just look at that same valuation and say, well, how much would it be? Now it would be a $600 loss at that same level, that same 133. So $150 loss compared to a $600 loss on a down move. That is a substantial difference. So we were about here and we're about there, based on the fact that I could just buy that long put, if that makes sense. So that's one of the reasons that we're doing that. Now, to get rid of the decay, what we can do is we can just change this long put to a later date. And this trade now creates a position that's quite good. If we were to drop down to 133, I'm not saying there's no risk on it, but the having a diagonal setup actually very much increases the probability of profit. And this loss, which is like $129, may not be a loss at all. If we were to see this run down, because this spread functions the way it does, this actually, the IV increase from a trade like this may push the profit tent up, and there may be very, very little downside risk. We're still collecting almost $11 a day in theta decay. Now, opening the trade for only $110. So we can see what that saddle looks like. Saddles that are shallow, and when I say that, we talk about a diagonal that has a shallow saddle. That is optimal. Because what I don't want to do is put myself in a position where the saddle is too deep. And I can just show you that. If I was to go out to July 25th, I'm going to buy the call side, which, you know, may not be necessary. But as I do that, I'm spending more money. I'm getting myself into now a debit. And what that does is it creates a shallower saddle. It also increases my risk to the downside, because if the market goes down, this call that I'm paying $134 for is going to lose its value. But the overall risk on this trade is now substantially less. So if we were to look out at, say, 100% move, we can see that there's a maximum loss that can occur. Now, 631 bucks on the downside and $500. But the key is, what I'm looking for is, I'm saying, well, I don't expect NVIDIA to move all that much over this time frame. I think that it may stay between 139 and 157. And then I go back to the chart and I mark those levels on there. So here's the 157. And then what did we say? 139, right? So we look at the 139. Now I'm also going to put on a horizontal line on here, or a vertical line rather, and I'm going to put that at the expiration date, which is September 11th or July 11th. Now, here's the interesting thing about what I've done is I have picked these off of Delta. I've created this potential scenario where I can make some trades, and I have my break evens now marked. And let's just for a minute look at where this cone is. You know, this cone, it looks like this. And where does it, oops, I drew poorly, but where does it intersect? It intersects just outside of my expectation. If the market does go down, or if NVIDIA does go down towards that point of control, towards that fair market value, the volatility increases and this break even moves down. That's why I like a trade setup like this. This is the type of trade that I like, and I think that there is a very, very good chance of making money on a trade like that. One of the quick calculations I can do is just, let's just say, well, what happens over the course of time? What if I was to get out of this trade a couple days early? July 11th is when it expires, but what if I get out of it July 8th? Well, this trade is making anywhere between like $60 and around $60. So I might be able to get about 10% return on capital, 10% return on risk over the course of 8 days, 10% in a week. That's if I was to do that repeatedly over the course of the year. If I set this up and I just said I'm going to trade this same trade repeatedly on NVIDIA, and every day or every 8 days I'm going to put it on, I'm going to look for 10% profit taker. This could add up. This could help an account grow substantially. Now, things to watch out for, of course, like dividend payouts. So if there's a dividend payout coming up, if there's an event like a earnings play, double diagonals are actually great for earnings because they actually increase in value as volatility expands. So if we're coming up on earnings, it might be a great time to consider a trade like this. We're looking for an event coming up in the future and saying, hey, the volatility is likely going to be highest right before the earnings release. So these are all factors to look into when we're looking at different positions. We can go to the earnings announcements and we can see that August 27th is going to be the next earnings. So this trade won't take advantage of that because both the strikes are going to expire prior to that. But that's how I might play something like this. MB's asking about HIMS. Let's just pull it up. Let's take a look. HIMS, him and hers healthcare. Now upcoming earnings, we've got August 11th. We're just looking there, right where my arrow is. You know, I look at the same data all the time. I pull up these things. I'm looking at the same thing. Fair value $37, current value $43, up 3% today. Downside risk of 13%. We've got 3 bearish positions here, so trading high earnings multiple. Stock's taking a big hit, so momentum may be a little bit down. And then a couple analysts and provider earnings. But net income is expected to grow this year. So this is one of the things I look at. Let's look at the chart and take a look at what HIMS looks like. And then we'll pull up the options chain and take a look. So I'm going to type in here, HIMS. And we're going to we'll look at the chart. So, oh, yeah, that's a big move. That's a big move. And this is interesting. This is where this is why I subscribe to services like investing.com. So when the order that we look at things helps us determine what's going on. Now, when I looked at this on Investing Pro without even looking at the chart, I didn't know that the move had been that big. So we have this $43 price, and then we have a fair value of 37. So one of the things I know that has happened when we see a massive move to this is that there has been an IV increase. So now that I know these two things together, now that I know that it's trading closer to its fair value, and it has had this large move, this is where I might sell a put. I might say, okay, well, we're getting close to fair value anyways. If fair value calculation is at this level, like 37, and we were trading at $60, what happens if this rebounds from here? There's very good likelihood that could happen. And I might be able to make some money off of this if I'm willing to take the downside risk. It's already had a large move to the downside. And what I would want to do is, if I was going to take a long stock position or a long delta position, is I would want to make sure that my break even was below or at that fair market value. And again, why I subscribe to things like Investing Pro. And if you guys are interested, I do have links down below. So if you use those, I get a little kickback. You get the best discount you can get. When you use affiliate links from people like me, you cannot get better deals ever on those things. So if you're ever thinking, oh, I want to sign up for something, and you're like, how can I get a good deal? Go to your favorite YouTuber, use their link, you get the best deal, we get a good deal. It all works. That's why we promote these products. So it actually helps everyone. That's what it does. It's great value for using those links. So that fair value, $37. Let's look at the put side of that. what I might do is be pretty aggressive. I'm going to go out here and see. I typically only want to get a 1% on a position like this. So if I'm looking at 17 days, I'm looking at a stock trading at its fair value, $37. I'm selling a put saying I agree to buy the stock if it goes that low, and you're going to pay me somewhere between $70 and $87 to buy that position. That's pretty awesome. The other thing I look for is if I really want to be bullish, what happens if it rebounds? Can I make some money? Can I buy something cheap with this premium? And I'll show you a profit profile that I think is a very smart setup for people that are bullish on a stock and might return to that 60 level. So first of all, we're going to kind of zoom out. We're going to look at what the loss could be. So now if the price, what can I do here? I feel like I need to... That's fine. I'll just keep it off here. If the price action moves, like say the stock drops to $23, well, I'm going to be down $1,200 on this trade, and the maximum loss I can take on this is $3,600. So depending on the size of account, a naked put like this could be appropriate for a $100,000 account. You know, one lot of this. This is fine. It's got an 83% probability, and the max allocation is $3,600. That's great. I have the potential of making $79 on this. Now, that happens if the stock stays above $37, and then my break even is $36.21 based on the fact that I collect $79 a day. But again, not a huge potential. This is where I like to buy call spreads. If I really am bullish on a stock, what happens if I buy a call spread in here? What is the cost? So what does this mean? Well, I'm paying $277 to buy the 45 call, and I'm collecting I'm collecting $229 for selling it. So this is costing me around, like if I can get into this trade, instead of $80, it's now going to be a credit of $50. What that does is it increases my max return to $136. It barely affected my probability of profit. It barely increased my max loss. Because I'm still collecting $50 on the trade. I'm still making almost 2%. Over the course of 17 days. And if the stock recovers at all and goes back up above this 46, then this call spread will go in the money and I will be able to collect another $100 off that. So it depends on where you are. Now, there's another thing that we can do, which is to say, okay, well, what if I sell a spread above that? So now I can buy like a little condor or something. I can build something really complex. And all of a sudden you look at a trade. Now this opens. If we were to get this open, we're still collecting about $50, somewhere in there, hopefully a little bit more. But now I have the potential profit of getting into this trade, and I have elevated, I'm collecting $50 right off the cuff. And if it goes up into between 46 and 51, if it recovers into that zone, then I have the chance of making that extra $100. And I can kind of play with that. So where was I? What were those levels on here? I'm just going to mark these and then we'll take a look at where those levels are. And this is how I like to play with my trades. So 46 and 51. And I'm just going to put those on. That would be my max zone. 41. What did I say? 41 and 56? I can't, doing these streams, you like lose your mind. 46 and 51. 46 and 51. 46. And 51. So it's relatively small little area. Maybe that's not where I think it's going to go. This is why are we seeing what am I seeing here? Yeah. What's going on? It doesn't look right about that. Here's the gap. 43. Okay. I don't know what was going on in ABKR. Let's mark it on here. So 56 and 41. 46 and 51. I can't believe I can't get these two numbers right in my head. 46 and 51. Let's get some numbers on here. So 46 is going to be right here, and I'm going to add a horizontal line, and then 51 is going to be here. So the point of control, now that I'm looking at this for the last little while, is actually above this level. So I may not want to put that call spread that tight. I may want to keep it outside of here. And this is why I use multiple setups. So this little zone might not be right for that extra $100 bonus. And what I can do is I can just move it out. I can just say, okay, well, let's take this lower. Let's go to, 57.56 and see if there's some value there. Remember, I'm only collecting a small credit. So if I'm collecting $7 for this, let's go. What is all this stuff on that? What's all this jazz on the screen here? My profit profile is a little bit wider here, 56, 57. And the other thing I could do if I really wanted to kind of increase the potential of this trade is I might just go and sell just the call instead of doing it as a spread. Or what I could do is make this wider. I could have some risk to the upside. And what that would do is it would increase my potential profit. And we can alter how the profit profile looks when we see this. So now I've got a maximum return of $150. May not be worth it. Remember the short put was $80 just by itself. So in this case, I would only make $50 in this range, but then I would have a range from now from 46 to 56. And if we go back to that chart, if we go look at this on TradingView and I move this over to the 56 level, yeah, I might be quite happy with that. I might say, yeah, that's the way that I want it. If I'm going to be defending the trade if it drops below into this 56 or 37 level, but I have a really good probability of making that max return of $150 on there, which is a nice, sweet little return if this recovers up, and that would be moving towards that point of control. So hopefully that helps. Vroom, zoom, and boom. I love that name. Let's take a look. You wanted to look at ASTS, and we'll pull that up right now. Get some of this garbage off the screen and click on this. Whoa, that move has been big. These are the one-day tickers. Yeah. I don't really track the stock. What is it doing? It's we saw Space Mobile. Well, that looks like a rocket ship, doesn't it? Way outside of its Bollinger Bands. I would have to read about what's going on. Is this AI driven, or is it some sort of space exploration, or vacationing or something? I'm not really sure. This type of thing, what I would do, looking at that point of control, again, I would look for plays that are closer down to that 25 level. So if I look at the chart, or I look at the option chain on something like ASTS, I would very much be concerned about the stock coming way, way down, and what we can do. Like, is there money to be made if it did come down? Like, you can buy options down here, 40, buying an option at the 40 put for not very much money. Stock's trading at $53, up $3 today. And what if you were to buy some positions to the downside? Like, this is the type of thing that gives you a very, very directional trade to the downside. Sorry, I'm trying to clear this off here. But if we saw a move to the downside, this profits between $33 and $50. So this is a short delta trade, and over the next 11 days. What happens with this is, if the stock doesn't drop this low, like if it doesn't drop below 40, then this 32 cents just is, the $32 that I'm collecting for selling the short put at the 40 strike is just back in my pocket, paying me out. So then I can sell another short put against a long put. So that's something that I might look at, and then I would go to the chart and say, can I make some money off of this if I want to take a directional trade? We can do this both ways. The call side, you could do the same. You could say, well, here I can buy the 70 call, and in the short duration, sell the 70 call. I'm collecting $142. So my profit profile is to the upside. So I could potentially make up to $700 on a trade like this. The IV will definitely contract if the stock continues to go up. But what this is doing is creating a lower risk trade for me. And then we can couple that together and say, okay, well, is there a way that we're playing this as a double diagonal. We can make money off of either side, and it could work out quite nicely. This could be one of those positions where you're like, I'm not taking a huge amount of risk here. You know, I'm risking like $100 if it stays around that above $40, but I have the potential of taking some additional growth on this and this is the chart over the short duration. So these double diagonals are definitely one of the most flexible trades that we have in our disposal because they have large ranges. Now, if I wanted to have less downside risk, what I can do is just play this as a multiple. So I can say, well, what if I do 2 of these puts, which we knew had a profit profile below? Well, now I've got that potential negative saddle here. And if the market sells off, we're going to have volatility expansion, which is going to be great. And as time goes by, this is going to just make money. It's going to decay at the rate. It doesn't have a massive amount of theta decay, but it is decaying at 80 cents a day. So, you know, $1,200 potential investment. And, you know, they're only on a double diagonal, you're only risking, or a double calendar as this is set up, you're only risking the amount paid for it. So you got $1,300 in risk, and you could make, you know, quite easily a 10% return if the market was to move sideways or just not move at all. But if we go to these peaks, there's definitely going to be a volatility expansion. You're going to have 2 puts that are making quite a bit of money. There's positive theta decay, actually slightly negative theta decay. That's even better. It's worse. It would be better if it was positive, but slightly negative theta decay. The key is to buy these for as cheaply as possible. So sometimes what I do is I put this order in and I just say, okay, well, it's trading at 1362 right now. What if I just put in a buy order for 1300? And if I can get into this for $60 less, because it's going to be movement in either way that creates that. It may not fill today, it may fill tomorrow, and it may not fill at all ever. But if I can get into it, then I've had a better entry, and then I end up with a higher profit profile. Entry is key for all of these things. Steven says, interesting analysis on NVIDIA. Thank you. You're very welcome. Vroom, Zoom, and Boom says Space Self-Service, AST Mobile, Space Mobile engages in building a broadband cellular network in space to operate directly with standard unmodified mobile devices based on extensive IP and patent portfolio. And Vroom, Vroom, Zoom, and Boom says, thank you. Very helpful. Yeah, you're very welcome. You know, it doesn't really matter what the underlyings are. If one of the things that I have found over the years of doing this is that when we're looking for anything that is that we're trying to invest in, what we're trying to do is make money on a daily basis. So there's a little bit of technical analysis that goes into it. There's definitely some underlying stuff, like what, you know, this stock has obviously moved up, or the stock has obviously moved down, or it's obviously trading neutral. We can see that from the chart. The question is, how do we position ourselves into a position that is going to potentially make us money daily? So I think one of the key things that when we look at trading in general is we have to mitigate our losses. If we keep our losses small and our gains big, we will grow our portfolio over time. So taking unnecessary risk is not appropriate unless the setup is perfect. So for something like ATST, am I saying that right? ASTS, we are, you know, the risk is obviously to the downside. Like, you know, it's pretty easy to make money on the upside when a stock is trending like that. You know, it doesn't really matter what we do. We can do short duration plays and make money and kind of follow that trend. But we don't want to take too much risk. So that setup hopefully kind of gives you an idea of how I might use a calendar spread to say, it's basically the put calendars are adding protection to the call spread, which would be making money from that continuation of that trend to the upside, if that makes sense. And the ratios make it way easier. So as soon as you have a big enough account, you can say, okay, well, I can afford to lose this full $1,300. Like, obviously, if you're trading in a $2,500 account, a trade like that is way too big. You know, it's just way too much risk. So from a $1,300 of risk, you know, appropriate to, you know, maybe a $50,000 account or better, then, and that's okay to let that play out. And yeah, I like it. I like it in general, those types of trades. Condors work great when the volatility is very, very high and the movement's very little, but those are unique situations. We don't see that very often. You know, last week was a good example of a condors where they would have worked quite well, because we actually weren't seeing a lot of market movement, even though we had high volatility because of the war. But we've suddenly today we're seeing less volatility. So now it's time to not put in these trades. I was taking off my double diagonals. Now today is when I'm looking to put them back on. And we play that day by day. Oh, my chair's squeaky today. Okay, I'm gonna call it. You guys are great. Thank you so much. What we're trying to do here is get rich together. So if you haven't checked out my Discord, please do so. Head over to patreon.com/drawbridgefinance. You can sign up for free over there, and you can join the Discord chat and say hello. And we post trade ideas, we post results and all those things. And of course, you can see all my trades if you join one of my paid tiers. Thank you so much, everybody. Let's get rich together. Take care.